Hi, folks. Dan Bird here with the daily scan for Wednesday, December 18th. The market is still open. It's about 3:20 Eastern Time. The Fed just had their meeting. Actually, Powell's still talking right now. Lowered rates as expected by 25 basis points. Even though it was as expected, the market doesn't seem to really like it. So we'll take a look at it. This is going to be a short one today because I'm going to need to leave here shortly. But real quick, I'm not a financial advisor. This is for educational purposes only. I cannot make recommendations on what to buy or sell. And you need to understand your own trading style in order to do that. So let's go real quick and take a look at where we are. First, I want to take a look at, let's look at the 10-minute chart for the market, see what it looks like. There it is, right there. Fell off a cliff right after the Fed meeting. So you would think that the market would be expecting this, but instead, starting to come back a little bit right now. Powell is still speaking, but he basically said that they're probably only going to have 2 cuts next year and maybe 2 the following year. So I think that was a little more hawkish than what the market expected. Now, keep in mind, and if you go back and watch the video from Monday about Max Payne, market makers don't have any incentive whatsoever to keep the market from falling. So if it's going to fall, they're just going to let it fall because they can save a ton of money by not having to pay out those premiums at the end of the week. Options expiration is on Friday. So that may be playing into this a little bit. Notice down here the VIX is heading much higher. It's up almost to 19 right now. So I'm going to go look at the VIX as well, see what that looks like. And there you can see it right there. It's right back almost to 20. So went from below 17, blew right through this buffer zone, and maybe ending above 20. It's actually at 1893 right now. So up almost 20%. So the VIX is not helping. The market in general continues to fall. We can look at, this is the 10-minute chart, but if we look at it on a daily, you can see right there, went right through the 21-day moving average, going down to the 50-day. This is the S&P. So it's continuing to fall, and all of the momentum indicators are rolling over. So that might be continuing through the rest of the week till options expiration on Friday. I'm going to try to update this tonight. I'm not sure. It might be later tonight before I get to it. But if we look at the NASDAQ, big drop on the NASDAQ right there. So kind of been waiting for this shoe to drop, haven't we? So there it goes. It's heading down. That's what it looks like closer up. So still above the 21-day moving average and still above the support line, but heading there quickly. And that may continue into tomorrow. We'll see what happens at the end of the day today. So one thing I want to look at real quick is TNA. So here's TNA. This is the 3X leveraged ETF for the Russell 2000, so small and mid caps. And in general, I think the market was kind of expecting those to start moving higher if the Fed's going to continue cutting, because that helps small and mid caps. And you can see what's happened since it hit this double top over here. It's actually moving lower. So let's put a line, let's put a support line in let's see, right here on this, where this gap is. And you can see it blew right through that gap today. So put 2 lines right there. So there's the gap. So it blew right through the gap and now sitting down here. If we put a trend line in kind of across these bottoms right here, blew through that. The next support is probably going to be down here. Somewhere, maybe this gap right here. That gap's already been closed. So there's a gap right here too. We'll just call it right there. So maybe headed down here. However, we're going to have to see what the reaction is for the rest of the week. So theoretically, this could turn around and head back higher, but sure doesn't look that way right now. And if we look at this on a 10-minute chart as well, we can see what it's doing right now as we speak. And you can see right there, it's starting to recover a little bit. And Powell has finished speaking. So, but I don't think he had anything different to say, frankly. So the market had its reaction. Now we're going to have to see what happens tomorrow. But that's where it is right now, pretty far down. So it doesn't look like it helped small caps. As a matter of fact, it's still near the low of the day. In fact, it's right at the low of the day. The low of the day is 44.18, and that's where it is. So it's continuing to go down. So it's sitting right at the low of the day right now. So certainly hasn't helped small caps, hasn't helped the overall market. The overall market looks like it's going to continue going down. I think it's probably going to continue right through the end of this week and probably the first couple of days of next week. And we may even be in jeopardy of the end of December rally not showing up. So if it shows up, it's really going to have a lot of work to do to try to recover. But right now, everything is falling. I think what I put in the newsletter last week, where I showed an article that said 60-40 portfolios because stocks have gone up so much are now 65-35. So in order for them to balance it back to 60-40, they're going to have to sell stocks to do that. That could be what's happening, and that might continue. We'll see if it continues into the end of the year. But right now, I would be standing aside. We're stopped out of 2 of the stocks on the daily scan list. The other ones are still hanging in there, but they might get stopped out as well. I would just say stand aside, don't go long, wait for all of this to settle down, and see if maybe we are ready for a significant decline even before we get to January. That's the way it's feeling right now, because the market really didn't seem to like what Powell said, or didn't seem to like another 25 basis point rate cut. So not a good thing. I'm going to update this chart, and it probably will continue to go lower. We'll see what happens. Might take out this previous low right here. It's getting very close to that, actually. But interestingly, this market bias chart has been kind of predicting all of this all the way back here to the beginning of December. So this has been, actually, it's about 2 weeks ago. So this has been a pretty close to what the market actually does. So we'll see what happens. Bitcoin, see what Bitcoin's doing. Bitcoin's coming down as well, just like everything else, sitting just below support, right above the 21-day. In fact, most everything right now is still above the 21. So technically, actually the S&P is below the 21. Take that back, it's above the 50. So technically, there's been a little bit of damage done, but it did that back here too, beginning of November rather. It went down to the 50. So that might happen again. Might get there and recover and head back higher. We'll see. If it breaks through that and gets into the cloud, then it's definitely going to be concerning for the rest of the year. Just like TNA. So we'll look at IWM, which is the Russell 2000. Same thing. Looks the same. So that's already below the 50 and already in the cloud. So the Russell small and mid caps are just simply not performing like everyone thought they would at the end of the year. However, to be honest, even Stock Traders Almanac says that they don't start their run until after the middle of December. So really next week. But to me, it doesn't look too good. It doesn't look very promising to me for small and mid caps into the end of the year. And again, it's sitting near the lows again, to the low to 222.84, and we're at 222.92. So it hasn't come back up much. So that's where we are. It's 3:30. So we got 30 more minutes till the market closes. Just out of curiosity, we can look at the dashboard, and it's probably all red. Yep, Dow down 600 points. NASDAQ down 500 points. So all of that's looking pretty negative. The VIX now is at 1962. It's getting ready up 23% today, getting ready to cross over into that 20 area. All the sectors are negative. Healthcare and staples and utilities and energy, all of the defensive sectors are at the top of the list. Discretionary, technology, and communication services still in the middle, interestingly. So sectors are looking not too great. SoundHound, interestingly, is at the top of the list for these stocks over here from the top 10 list. These are the top 10 right now. The bottom ones are these. There's Upstart, was on our Core Z. That's one that got stopped out today. So a lot of these might get stopped out. There's Honest Company that got stopped out today. We look at that. You see that's, went below actually opened just below the 20-day and continuing to go lower. If we look at Core Z, same thing, below the 20-day. Lots of stocks look like this right now. So everything is falling out. So stops should basically take you out of everything as the market declines. There will be losses. That's just part of the market, part of trading. And you want to minimize the losses so you can continue to trade when the market starts to turn around again. So most likely we're going to be in cash at some point pretty soon. The other two are still hanging in there, but I wouldn't be surprised if we're in cash with everything pretty soon. And then we're just going to sit on the sidelines and watch what happens. Maybe even go to an inverse ETF like SQQQ is the triple NASDAQ. So you can see right there, it's just beginning to start to move higher. Let's see. Let's look at a 10-minute chart on this one. Yeah, this one's definitely moving higher. So we'll see if the market continues to sell off, then we might be positioning into some inverse ETFs. And by the way, on the website, on the charts page, just for those that may not know, at the very bottom left-hand side are the inverse ETFs. So if you want to play, for instance, the S&P, this will show you the inverse ETF and right next to the S&P. So they should be mirror images of each other. And you can see the inverse is sitting right at its 50-day moving average right now. So if this continues to go higher, it's going to confirm that the inverse ETFs might be the place to position ourselves as the market goes lower. We've got other ones here like there's 2-year treasuries, bonds. So inverse on bonds, that's moving higher. Bonds are continuing to go lower. We've got semiconductors. Semiconductors actually went up a little bit there, went down a little bit, but it hasn't broken the chart yet. So we'll see if NVIDIA and the rest of the semis can help us along. Anyway, that's if you want to explore those some more. Here's gold. Gold didn't do well today either. In fact, gold has been going down for a few days now. These are the gold miners. So you can see right there, there's the inverse. So when gold miners start to decline, you can jump into this one instead, and that one will go up. They're mirror images of each other. All right, that's it. Thanks for watching. Please like and subscribe if you would like me to continue doing the YouTube channel. And if people aren't interested, that's fine, no problem. I want to educate people and help people understand how the market works and understand technical analysis a little bit better. So that's really the reason that I'm doing this. So I hope it's beneficial and useful for everyone. Thanks, and hopefully we'll talk to you tomorrow, and we'll see what the reaction to today is. Thanks, everyone.